Hello, this is Martin from seekedge, channel for learning about investing and trading. Welcome to another episode of Technical Analysis series, where today we are going to look at a very interesting topic on momentum, divergence on momentum. So I'm planning to put this as two separate sessions, and the first one is today, where we would be basically looking at the bullish and the bearish divergences in the momentum. So let's get into it. So I'm using these slides just for the purpose of not missing out on points. So we would look at this on the charts also after we go through the main points. So what is momentum, right? So when we talk about momentum in trading means it measures the rate at which the price rises or the price falls, the price of the stocks or any instrument, right? So you have the price and then you have the rate of the rise, the rate of the speed basically, right? So why do we need to know the momentum? There are trading strategies where we buy the stocks, right, that are rising, right, and sell them when they're falling, trend following, right? So this is what momentum is all about in very simple terms. Now, which indicator, right, that I would be trying to explain the momentum is RSI, relative strength index. There are many other indicators which would help you to understand the momentum of the price and then take trades. But this explanation is purely based on the relative strength index, and which is developed by Wells Wilder, who developed the same ADX indicator that we had seen in the previous. If you have not seen that video, the link would be available in the playlist link would be available in the description. You can check that. So later, Andrew Cardwell also added a lot of improvements in the RSI indicator, right? So the purpose of the session is not to go deep dive into RSI, but the assumption is that basic RSI is already known, and then how to trade based on the divergence in the momentum is the purpose of the video. So let's quickly go through that. But so the signals, the RSI gives signals about the bullishness or the bearishness of the momentum, the price momentum, right? So the RSI would have a high band and low band, right? By default it's 70 and 30, right? But I will be using 60 and 40. That works. So that works for me. So you could also try that, or you could, if you're back tested, you can have your own parameters. But what I am discussing is what I have found comfortable with, right? So these are the two bands for that. Band ranges would be that. So when you configure the RSI, you should set the band high and the band low of the RSI. Same thing can be seen on the right side. You have the band in the violet color, 60 on the top and 40. So traditionally, conventionally, if you say the momentum indicator RSI is used for overbought and oversold. So anything above 60 is considered to be overbought, and then anything below is oversold. So you tend to, so that is a conventional way of looking at RSI, and then take the trades accordingly. So it's overbought means select, oversold means buy it. So here there is a difference in the approach. The RSI is not used in the conventional way, right? When I am explaining this, I am treating the RSI indicator just to identify the bullishness, bearishness, and the sideways movement of the price. So you have to keep that in mind. So when you have ideas about overbought, oversold learnings, you will have to unlearn that before you further get into this. So this is totally different from the we don't have the concept of overbought and oversold in any of the explanation that's coming here, right? That thing has to be unlearned, and just reminding once again. So once again, this is a lagging indicator. So price is always supreme, right? Price comes first, and RSI, it's not the other way. Indicator does not give anything first and then price follows. That it's not that. That is the wrong. If at all anything like that is in your mind, you'll take out that. Price is supreme. Price comes first. So if you know how to do price action, learn from that. That is supreme, right? RSI supports and give you other insights and other perspectives on the price movements also. So this is derived from the price only. So we are not getting into the formula of calculation of the RSI. All we need to understand is it gives a momentum indication, right? The speed indication. So RSI alone need not be used. You can have since this is a lag indicator, we have to use other trend lines and price candlestick patterns and all, Fibonacci levels, pivots, and all these can be used in confluence along with combined with this RSI. Then it becomes more effective. Instead of trading only on based on RSI. Just to remind you that price is supreme and this is only a lagging indicator. Right, so RSI is an indicator for momentum. Let's see what else. What is divergence? So this session is all about divergence in the momentum, right? How we can make use of that and then trade. So divergence is nothing but so basically the trend consists of swings. You know that higher high, higher low, lower high, lower low, right? So we had seen that when we discussed about the previous sessions of ADX also. Higher, what a trend? Trend happens in swings, right? Trend is not a one straight line. Price does not move like that. Price moves up, retraces, and then moves up again, and then retraces, consolidates, then moves up again. So it comes through several series of swings. So the deviation of the price as continues to the trend without necessary momentum to sustain the move. That means price is moving up and the momentum is not there. Price and momentum is not going in going together. That is when you have a divergence. So there is a divergence when you don't have enough momentum, right? That indicates, that gives an early warning on something is going to happen, right? So that early warning is what we are trying to anticipate and then take trades with tight stop losses, right? So it's basically similar to suppose a car is moving in a fast lane and you have to take a U-turn, right? So the car would be slowing down, right? So when it is slowing down, only then you can take. If you don't slow down and take the U-turn, you know what happens, right? So the momentum is slowing down, gives an indication or early warning on something. What is that something? We'll see. So that is what divergence is all about. Now look at this, right? This is a swing, right? So bearish divergence. Now we are in an uptrend. The price is moving, with higher. So, but look at what momentum is doing, right? It is not going the same way as the price, right? Similarly, look here, the price this is the bullish divergence. So the price is moving in one way and the swings does not continue on the momentum. So price and momentum swings has to be the same way. If it is not in the same way, it gives an early warning. That's what you want to see. So bearish divergence is doing so you'll understand this more than the description when you get to the charts and see that. So bearish divergence happens during uptrend. When the market is trending up, you get an early warning on potential divergence. When the price makes a higher high, but RSI is making momentum is making a lower high. So it's contradicting, right? It's contra. So that gives an indication that probably the price is also going to follow the RSI and the momentum, and then it's going to make a correction. Similarly, bullish, when it is at a downtrend, the price is making lower low, but RSI is making higher high. That indicates that although the price is falling down, there is a chance, there is an early warning that the price can revert back and move upwards. That is what bullish momentum is. So it's very simple. So there is one more concept that you are learning related to the divergence only, which is known as momentum range shift. So this is like one leg of the momentum. We'll see what exactly is that, right? It moves in the one zone. That one zone can be bullish, bearish, or sideways, and then another leg would shift from that to the other zone, right? Another zone which can be again bullish, bearish, or sideways, and then it takes a support, or a resistance, right, in the second zone, right? So we'll see that when we'll understand. So basically, the movement of the momentum, shifting of the momentum from bullish to bearish or bullish to sideways or other vice versa. That is what the range is shifting from one zone to other zone. So we basically have, with the help of the bands in the RSI, we'll be having three zones. One is middle band. So whenever the price, the momentum indicator is oscillating within the bands, it is sideways. Whenever it is oscillating above this band of 60 or 70, whatever you have set, then it is bullish. Whenever it is falling below the 40 or the lower band, then it is bearish. Bullish, bearish, sideways. So whenever there is a price indicator oscillating from one zone, it moves to the another zone. That is known as a shift in a momentum. That also can be combined with the divergences, which becomes very effective when we are taking the trade. That is why this range shift also concept also is included along with divergence. So this is exactly what I talked about, range shift. You can see that this is the RSI. The RSI is moving from the sideways zone into the bullish zone. The first, here you can see that it is moving from the bullish zone into the sideways zone. Here you can see it is moving from the bottom, the negative bearish zones into the sideways zone. Here you can see that from the sideways it is moving to the bearish zone. So these are the four possibilities of momentum shift. Now let us see some of the example screenshots. Right? So bullish momentum divergence. This is an example for that. So where do you see that? You can see that this is the chart for the ICICI Bank. Here you can see that there is this very small bullish divergence. That means the price is coming down, but the momentum bottom here, this arrow, the RSI indicates that the momentum is increasing. So if we get this early warning, right, we can ignore the price movement and wait for the confirmation for it to bounce back. Look at the move that happens, how many times it has moved. See, this never stopped, right? Several multi-year upward movement is what this small 3 or 4 bar indication gave. So the price is basically moving down for ICICI Bank, and the RSI momentum is actually moving up from the bearish zones. Okay? It's contradicting. So it gives an early warning indication that the price can reverse upwards. This is an example of another example of a bullish. This is a TCS. Here in this example you have both of them. So here you can see on the top bearish. So in the bottom we'll see first bullish. So here you can see that the price of TCS is coming down. At the same time, the momentum RSI indicator is showing that it is moving up. That means it's giving an early warning that price will go up, and accordingly it moved upwards. This is bearish divergence that we'll see in the examples. So this is bearish divergence. Bearish divergence, what is that? Whenever it is moving up in the uptrend, see, this is a chart of TCS again. You can see that price is moving up, and then at the same time this is moving down. So it gives an early warning that the price can fall down. Look at the fall, big fall, double the target, double the size of that, that swing, right? Okay, so the swing is this. This red candle here, that's the swing low. This on the top is the swing high, right? Similarly here, this is the swing low, swing high. So swing low and swing high in the bearish momentum has to be above the 60. Similarly, swing this, these 2 points has to be below 40 if it has to qualify for a bullish divergence. So here what you see is bearish divergence, which gives an early warning on down movement. Here it gives an early warning. This is very clearly explained. Now bearish, another example is HDFC Bank. Look at this down, what a big fall. So here the price is on uptrend, it is moving up, but momentum is showing a down move. Look at the fall, big fall. I think this is Corona fall, probably, I don't know. But yeah, so it gave early warning. Much before the thing happened, it gave clear early warning. So range shift is an example. This is a chart of Reliance, right? So you can see that the momentum is there in the sideways zone, and from there it moved up and settled in the bullish zones above the band, and then look at the move. So that means the range shifted from sideways to the bullish zones, and then look at the move that has happened upwards. It's hardly slipped between, but look at how many points have come in on this. So this is primarily, we are talking about swing and positional trades on a daily candle. It applies for any candle, but it will be effective on swing and positional daily and weekly and monthly like that, right? The smaller the candle, it will be more effective. Higher the time frame, if you see a perfect divergence or a range shift, then it works better. So how do we use this for a trade setup? These are certain points, some of which we have discussed, some of it. So essentially we are using this for taking contra trades. You have seen, so if you take it, so range shift, is not a contra trade. It's a the direction is clear. It should be shifted there, and from there it was taken the support. So taking the support. So from the sideways moving up and taking. So this is not contra trade. Here the direction is not. We are expecting the market to move and taking the trade. But this is contra trade. So we are talking about divergence trade is contra trade. So range shift is mentioned here because range shift along with divergence, if we get anything, no, that is very high probability of that working out. Very rarely that happens. That's why range shift means. But we are talking about this contra trade about the divergences. Look at here. So this is a contra trade because the market is heading up. So everyone is supposed to take the trade in the direction of the market. But we get the indication that it is going to slip. So we take the contra trade, and if it works out with the tight stop loss, that is what trade setup. So swing lows and swing highs has to be very clear. We talked about that swing lows and swing highs. See, the swing is what is important. Whether the swing is broken or not, right? The markings and the swing low has to be very clear, right? See here, you have the swing lows and swing highs, right? So that has to be very clear. Closing price of the swing. No, when we are comparing closing price only, we have to compare the closing price. So we will look at this in the charts actually, then you'll understand. No, the closing price has to be considered, and then there can be multiple divergences that can come, not just one, right? Sometimes, right? Now this, I've already mentioned this, the lesser number of the bars, more effective it is, right? No, it's not, so it's more diluted if large number of bars are there in the divergence that we are marking, then it is not, it may not be that effective. Right? So entry will always be on the confirmation only. So we have marked a divergence, and then when the high is broken the next day or the low is broken the next day, that is when we enter the trade with a stop loss on that previous candle's low or high, and then the target will be the swings high and low. Right? We will be, we'll be marking it on a swing. That swing high and low. We'll be seeing the setup in the charts directly and understand better. Right? So even if there is a small minor difference, of increase or a decrease in the RSI or the price, it is valid, right? Still it is valid, right? And first is the best rule is because always, multiple divergence if it comes, or multiple range shift it comes, the first occurrence is always the effective. Okay? So you should bank, the first is the best. That is the rule. So let us look at some of these divergences on the chart itself. So I have not prepared anything. I'm just looking at the charts straight away and trying to see if we can find any divergences. Right. So this is the I randomly picked a Bank Nifty chart. I'm trying to see if there is any divergence that is happening here. So we are just roaming through the chart. Right. So let's make this slightly bigger. So here you have, first you have to see the peak points. I'm searching for bearish divergence, right? So here you can see that the RSI is 66.23 and 64, so it is moving up, so there is nothing here. And I move up here, I see that it is increasing. So let us see what is happening here. So here I see that the price is, there is a divergence, but there is not. That's a failed divergence. The price is moving up and RSI is coming down, but it did not fall much. So I don't find anything here. I don't find anything here. And let's look for some occurrences. Here you have, so basically whenever I check this, I use this line chart. Right. So here you can see the price is, the closing price is 31,647, and so here I can find something, right? So it's a small divergence. So here I can see that the closing price is 31,647 and the closing price is 31,640. So there is a difference. So I'm marking this, right? It would be better if I mark it on an arrow, right? So I'm marking that here, then I am marking it at the same RSI down here, like this, right? That means the price is moving up and the momentum is down. So I am expecting the market to fall down, right? I'm expecting the market is fall down. That is exactly what happened. But I got an indication much ahead. Here, this candle, when the price is moving at zero, I got. So how will I enter? How will I enter the trade? Right? That is the question. So I'm assuming that the swing is this, right? So if this, I will make a marking here with the horizontal line here. I will make a mark here, right? Because if you go back, the marking, if you see, yeah, so this is a swing low actually. So our swing is here, right? No, our swing is here actually. So it is only till here, right? The swing low is actually not that. This is the swing low. Swing high, swing high and low is not on the closing price. It has to be on here only. So yeah, so this candle is inside. So the candle low, highest low point and higher point. So this is what my two. So this low of 30,633 is my target if this divergence works out. And when will I enter it? The moment I see that the next day, that is June 3rd, 2019, when it comes below this previous candle, I put the stop loss as the high, 31,783.60 as the stop loss, very small stop loss, and then I take the trade. If it works out, my target will be 36, but actually it gave a more than what the target was meant for, right? So this is how we trade. So this is a trade setup. So this is how many bar? 1, 2, 3, 4, 5 bar divergence. It's a very good divergence and it met the target. Similarly, any stock, you know, I can take any stock. I'm just taking Infosys stock and let's see if I can find something on it. Right. So I'm just hovering. So this is a daily candle. I can clearly see that, I'll just once again use Infosys. Okay. So I can see that there is a price that is moving up and pressing. So right now, if you see, there is a divergence. You would come to know whether it will work or not. So here you see there is a, so just clearing it off, right? So I'll take the same arrow itself and then I am marking it, right? This is a, I'll mark it the other way. So here we can see that the price is moving up, but this is moving down. Momentum is moving down. So there is a chance that Infosys can fall back to what level? How will you mark that? Yeah, so this is the swing low. What do you mean by swing? Right? So this is the swing, right? This is the swing, and this is a swing on the momentum. So this is the target. So the price can move up to 1534. It has to be candle low. So the price can move up to, right, 1536 levels, and I will take the trade if it falls below next trading day, below this previous candle. I'll take with the stop loss as 1598, the high of the last candle, and then very small right, very small stop loss. I will take the trade and it will come down. So similarly, you can find the trades, right, in any of the stocks, and this is very effective, right? So but the only thing is you have to practice by identifying these divergences, range shifts, and bullish, bearish, and all kinds of divergences in chart, and you have to practice a lot to get to see this, identify it early, and take the trades accordingly, right? I hope it will just given you a perspective on how exactly it's actually given you a very good trade setup, and also it teaches you what exactly the divergence. I hope you would practice this, and take trades in with very good levels, and risk management, um, as per your capital and your risk appetite. and I hope it will you will find this very useful technical indicator study. Right. Request you to please share this with your friends, colleagues, and whoever you think may benefit from it. And please hit the like button and share it to as much to help us motivate to come out with more videos on this. Thank you, and happy trading and happy learning.